I want to start today with a bit of a mental time travel. So I want you to, if you're not driving, maybe close your eyes for a second and just picture the bank of the 1980s.
Oh, boy.
You're standing in a line, probably on one of those marble floors that just echoes way too much, waiting for a teller behind, a glass screen.
And there's a pen chained to the desk?
The chain down pins, a classic symbol of trust right there.
Right.
But if you look at the timeline since then,
Hmm.
it's actually been a pretty steady march toward convenience. We went from those branches to ATMs, so suddenly cash was a 2 4 to 7 thing.
Mm-hmm.
Then the internet happened. We got desktop banking.
Yeah.
Then the smartphone, well, that put the bank in our pocket. And finally, everything sort of moved to the cloud.
It's been this relentless push to just remove friction at every single step, make the bank more accessible and less physical.
But here's the thing, and I've been thinking about this a lot. It feels like we've kind of hit a plateau. I mean, my banking app is great, don't get me wrong. But is it fundamentally different from what I had 5 years ago? Not really. It's just a bit faster. And we tend to assume the next step is just a slightly better chatbot.
Right. One that doesn't make you want to throw your phone across the room.
Exactly. But that's just an assumption. And if you look at what's happening in the engine rooms of major financial institutions right now, that assumption is just dead wrong.
It really is. We are not looking at a better way to talk to your bank. We are looking at a way for the bank to act for you.
And that right there brings us to our topic today, Agentic AI. And we're not just talking about some Silicon Valley startup here. We're looking at a massive strategic pivot from one of Africa's biggest lenders, Standard Bank.
And it's a fascinating case study because the stakes are just so high. So we're pulling from two key sources today to really make sense of this.
Okay.
First, we've got the strategic vision laid out by Jörg Fischer. He's the group CIO of Standard Bank. And he laid all this out at the Microsoft AI Tour just recently in late January 2026.
And to keep us grounded, because let's be honest, corporate strategy speeches can get a little heavy on the hype, we are pairing that with a really sharp, almost cynical critique by the AI thought leader Johan Steyn.
Yeah, his piece is called The Machine Speed Stress Test.
So the mission for this deep dive is to really understand two things. First, why is a massive regulated bank betting the farm on AI that doesn't just answer questions but actually executes tasks?
And second, what happens when you give software the power to move money and make decisions at machine speed inside an organization that, well, that might still be running on old habits?
It's that collision of futuristic tech and messy human reality. So let's get into it.
Let's do it.
Okay, so before we get into the bank strategy, I need to understand this term, agentic AI. It sounds like something out of a spy thriller. How is this different from the ChatGPTs or Geminis we've all been playing with?
No, it's a really important functional shift. Think of the AI we're used to, generative AI, as a super smart advisor, a creator. You ask it to summarize a PDF, it summarizes. You ask it for a poem, it writes a poem. But it's passive. It waits for you to prompt it, and it gives you something back.
So it's a conversation partner. It doesn't actually do anything outside of that chat window.
Exactly. Agentic AI is different because it crosses that line from advice to action. As Johan Steyn puts it in his analysis, these systems don't just answer. They plan and execute.
Okay, give me a concrete example. Because plan and execute still sounds a little abstract to me.
All right, let's say you want to pay a supplier. With a traditional chatbot, you'd ask, how do I pay this invoice? And it would give you instructions. Go to tab A, click button B.
Right. I'm still the operator. I have to do the clicking.
You still have to do the clicking. With an agentic AI, you just tell it, pay this invoice. The agent then figures out all the steps on its own. It thinks, okay, I need to log into the ERP system, check the purchase order, match the amount, verify the supplier's banking details.
And then initiate the transfer if it all checks out.
Precisely. It's not just retrieving information, it's using tools. It's clicking the virtual buttons. It has agency.
Right.
And that is what Jörg Fischer at Standard Bank is so fired up about. He's not looking at this as some cool feature to add to the app. He's viewing this as a total organizational overhaul.
He used a specific phrase that really caught my eye. He wants Standard Bank to be a frontier firm. Now, usually when I hear executives say things like that, I kind of roll my eyes a little. It sounds like buzzword soup.
I get that, but I think he means it. Fisher was really explicit. He said if you treat AI as a side project or just a bunch of isolated use cases, oh, let's put a chatbot in the call center, you are going to fail.
So you can't just sprinkle AI on top of a legacy bank like seasoning on a steak.
No. He compares it to those previous shifts we talked about, from branches to ATMs to the cloud. He sees agentic AI as the next fundamental layer. He argues you have to reshape the whole organization around it.
Which is a bold ambition. But when I hear reshape the organization, I just hear massive headache. Because banks are famously complex, bureaucratic beasts.
They are.
You can't just turn a battleship on a dime, even if you have a cool new engine.
And that skepticism is exactly where Johan Steyn comes in. His analysis, the machine speed stress test, is basically him pouring a bucket of cold water on all that enthusiasm.
Yeah, I loved his take on this. He talks about a brutal side effect of agentic AI. I mean, that sounds ominous. What's he warning us about?
He's warning us about what you could call the mirror effect. The idea is that agentic AI acts as a merciless mirror for your internal processes. It reflects your organization exactly as it is, not as the employee handbook says it is.
Okay, unpack that for me. Because every company thinks they have processes. They have flowcharts, they have manuals.
Sure, they have manuals, but think about tribal knowledge. Every company runs on it. It's all the unwritten stuff. Let's say the official rule is invoices over $5,000 need 2 signatures. But in reality, everyone knows the digital signature system is slow, so if you need it done by Friday, you just email Susan in accounting.
Ah, the Susan workaround. Right. That's how the world actually works. We rely on relationships and shortcuts.
And humans are great at that. We navigate the gray areas. We know when to bend a rule to get the right outcome. But an AI agent, it doesn't know Susan. It only knows the code and the explicit rules you gave it.
So if the AI tries to execute that task.
Well, ideally, it just fails. It hits a wall because the official process is broken or too slow. But the scarier scenario, Steyn points out, is where the controls are just weak.
Okay.
If your data is messy, say, your list of approved vendors hasn't been updated in 2 years, a human might catch that. A human might say, wait, didn't we fire that vendor last year?
But the agent just sees a valid database entry and executes.
It executes at machine speed, thousands of times. Steyn has this terrifying quote, he says, agentic AI turns weak controls into fast, scalable failures.
That's a nightmare. I mean, it's not just a typo in a chat window. It's actual money moving out the door.
Exactly. Steyn lists the specific risks. Initiating workflows, updating customer records, generating compliance evidence. If your internal plumbing is rusty, if your data is bad, the agent is going to burst the pipes.
So, in a weird way, before you can get to this sci-fi future of autonomous banking, you have to do the really, really boring work of cleaning up your data and fixing your process flowcharts.
That's it. Steyn calls it a stress test of institutional discipline. You can't automate a mess. If you automate a mess, you just get a faster, bigger mess.
This sounds like a paradox. To be futuristic, you have to be incredibly disciplined and almost old school about your data hygiene.
It is a paradox, and it raises the question, how does Standard Bank plan to handle this? Because Jörg Fischer, he doesn't strike me as naive. He knows he works in a regulated environment. He can't just move fast and break things.
No, absolutely not. Not when those things are people's life savings. So how do they prevent these fast failures?
Well, Fisher acknowledges the risk, but his solution isn't to slow down. It's to change where the security lives. He had that great line about not wanting to go to the security team 50 times for 50 use cases.
Oh, I can relate to that. The Department of No.
Right. That's the traditional bottleneck. Innovation team builds something, security reviews it, finds a flaw, sends it back. It takes months. Fisher says that model is dead. It's just too slow for the AI era.
So what's the alternative? I mean, if you don't have the security team checking everything, aren't you just opening the door to chaos?
His strategy is what he calls secure by design. Fisher wants the security, the compliance, and the risk rules baked into the platform itself.
Explain that to me. How is that different?
Think of it like a sandbox. In the old model, a developer builds a castle, and then the parent, that's security, comes to check if it's safe. In Fisher's model, the sandbox itself has walls. The sand is certified safe. The toys are pre-approved. You can build whatever you want inside that sandbox, and the organization knows you can't burn the house down because the platform literally won't let you.
Yeah. So the agent simply cannot execute a transaction above a certain limit because the underlying code of the platform forbids it.
Exactly. It's automated governance. And what's interesting is this aligns with what Steyn is arguing for, too. Steyn talks about the need for hard controls.
As opposed to soft controls.
Soft controls are things like training. And Standard Bank is doing a lot of, that Fisher mentioned, mandatory AI training for all employees, plus ethics training. And that's great. Cultural buy-in is huge.
Right.
But Steyn makes a sharp point. Training relies on a human choosing to do the right thing.
And you can't train an algorithm to have a conscience. You can't just tell it, hey, be a good robot.
Exactly. You can't trust it to do the right thing in a moral sense when things get ambiguous. You need a hard control, a digital gate that says, if X, then stop. You need audit trails that are immutable.
It's the difference between asking a driver to stay under the speed limit and putting a governor on the engine that physically prevents the car from going over 100 miles an hour.
Spot on. And for a bank, Steyn argues you absolutely need the governor. Without it, the speed of these agents becomes a liability, not an asset.
I want to pivot a bit here. We've been talking a lot about the bank's internal plumbing, the back office stuff. But both Fisher and Steyn are looking at this from a specifically South African context. Why is that relevant?
It's super relevant. Fisher is very optimistic about South Africa's role here. He doesn't see SA as just a consumer of American tech. He sees it as a center of excellence for developing it.
You mentioned the skills base, right?
Yes, South Africa has a strong financial services sector, good digital infrastructure, but more importantly, there's the need. Fisher talks a lot about financial inclusion. In a developing market, you have millions of people who are underserved because traditional banking is just expensive to deliver.
Right. Human bankers cost money. Physical branches cost money.
Exactly. But if you have agentic AI, the cost of serving a customer just legally drops. And it's not just cost, it's access. An AI agent can speak 11 languages fluently. It can explain a complex financial product to someone in their mother tongue at 3 a.m. for a fraction of a cent.
That's the democratization angle, putting the bank in the hands of individuals, as Fisher says. It's a really compelling vision.
It's the dream. But, and there is always a but with technology, we have to look at how this impacts the consumer directly. Steyn brings up a concept from FINASA, the FinTech Association of South Africa, called agentic payments.
Okay, this is where the rubber meets the road for me at the customer.
Yeah.
Agentic payments sounds convenient, but also kind of terrifying.
It is the wildest part of the vision.
Right.
We're moving toward a world where your personal AI agent handles your commerce, not just banking, but buying.
Like buying my groceries.
Groceries, paying your electricity bill, renewing your car license. Imagine you just tell your app, keep my fridge stocked and my bills paid. The AI monitors you, orders the milk, pays the municipality, and you just see the notifications.
Okay, I hate paying bills, so part of me is saying, sign me up. But the other part is thinking, what if it screws up?
It's the ultimate friction versus safety trade-off. We love removing friction. One-click checkout was a revolution. Zero-click checkout is the goal. But friction, typing your password, getting that OTP on your phone, that's what keeps you safe.
It's your moment to say, yes, I agree to this.
Exactly.
So if my AI agent decides to pay a supplier and it gets tricked, or if it hallucinates and buys 500 cartons of milk, who's liable? Who's on the hook?
That is the multi-million rand question. Steyn calls this out specifically. Dispute resolution. In the old world, if you authorized a payment, it's usually on you. But if your agent authorized it, did you really consent?
I mean, I consented to the idea of paying bills. I didn't consent to that specific payment to that specific scammer.
And does the bank say, well, it's your agent? Or does the bank say, our algorithm failed? The legal frameworks for this just don't exist yet. And Steyn warns that speed without control isn't innovation, it's just risk.
It seems like we're standing on a razor's edge. On one side, Standard Bank is saying, we have to do this. We have to become a platform that integrates AI into everything to survive and serve our market.
And on the other side, you have experts like Steyn saying, whoa, if you do this without fixing your data and your controls first, you are going to amplify every single mistake you've ever made.
It's fascinating, though, that Fisher and Steyn actually seem to agree on the solution, even if their vibes are totally different.
They really do. They both agree. You cannot just paint AI over the cracks. You have to rebuild the foundation. Fisher is excited about the building process. Steyn is terrified of the cracks. But the conclusion is the same.
Right.
The bank of the future isn't just a bank with better tech. It's a bank with better discipline.
And that idea of the AI as a mirror, that really sticks with me. It's almost philosophical. The technology shows you who you really are as an organization.
That's the takeaway. If your processes are logical and your data is clean, the AI makes you a superhero. If your processes are messy and based on handshake deals, the AI becomes a liability.
So as we wrap up, I want to leave our listeners with a question. We've talked about CIOs and massive strategies and all that, but let's bring it right down to your pocket, to your phone. If your bank offered you an agent tomorrow, a digital assistant that could log into your main account, read your emails, see your bills, and execute transactions to save you 5 hours a week. Would you turn it on?
That is the question of the decade, isn't it? Do you value the time more than the control?
And more importantly, if that agent made a mistake, if it wired your salary to the wrong place at 3 a.m. because it was moving at machine speed, do you trust your bank's safety net enough to catch it? Because once that money is gone, machine speed works against you just as fast.
Trust is the new currency. It's not about the interest rate anymore. It's about whether the algorithm has your back.
Exactly. A lot to think about next time you log in. Thanks for diving deep with us today.
Always a pleasure.